The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, everybody, for this Monday California PGA Chat. Hopefully everyone had a very nice and safe Easter weekend as we prepare for another week of laying low and safe and healthy. So, and hope you all are the same. This is the first of this week's chat. We'll have another chat on Friday, of course, continuing the series for Monday and Fridays, and hopefully with some useful information and updates for everyone to utilize and to possibly live by. So with that, just a couple of introductions. Thanks again to Bryce Seaver and Caitlin Doyle, Nikki Gatz for their work in the background to produce these programs. Again, would like to remind you of utilizing our websites, scpga.com, ncpgalinks.com, and of course pga.org. Also, urge you to use the discussion boards on all sites if you have any questions pertaining to this discussion or others, and keep in mind that you can ask a question through the webinar. Caitlin Doyle and Bryce and Nikki will answer those questions after each segment or to the best of our ability, and if they're not answered on this chat, we will follow up with an email in a response. So today we have our usual panelists, Craig Kessler, Kevin Fitzgerald, and John Lindert, who seems to be the Secretary of the PGA of America, who seems to be a regular. And John, we appreciate that and giving us a national perspective. Today, we have the PGA of America employment consultant, career consultant for Southern California, Ken Farrell. We also have Craig Kessler and Kevin Fitzgerald from the SCGA and the California Alliance for Golf. And of course, William Weissman, our special guest, an employment attorney from Northern California. So hopefully through this, we'll have the opportunity to provide you with a great amount of information and give you the opportunity to ask some questions. So with that, at this time, I'd like to welcome our president, Southern California PGA Section President, Mr. Tony Latendre, for a few words.
Well, good morning, everybody. And I just will be brief just to say thanks for everybody taking the time to be on the call. And it's nice that every week we have new guests to share new information and keep everybody updated with whether it be labor law, what's the latest in California law, what's happening in the governor's office and everything. But I just wanted to take a minute just to hope everybody had a nice Easter and had an opportunity to maybe spend some time at home with some family. And I know you probably spent a lot of time with family as of late, but spend some dedicated time just getting some good quality family time for the holiday. So hopefully everybody was able to make the best of it, and appreciate everybody's time and dedication and commitment to these calls. It's nice to see that we still have, we're gaining 200, looks like we're at 221 people right now on this call. And I think it's great that we have such a great following, and it's so popular. So please keep coming and getting the information. And again, I'm always available if anybody just wants to chat. So I'll put myself out there and let me know if I can help in any way. But we've got more important speakers than I, so thanks for the opportunity just to say hello again, and happy Easter to everybody, or happy day after Easter to everybody, and we'll continue on with the call. Thanks, Len and Tom.
Thanks, Tony. Speaking of 220 on the call, I'd like to remind you, and hopefully when you signed up, that you added your member number for MSR credit purposes. These chats have been authorized for a MSR credit, extremely valuable going down the road. So as you know, the MSR period, or you probably know, the MSR period has been extended 1 year, and this is your opportunity to gather a few credits while we're in respite here and observing the recommendations. With that, I'd like to welcome this morning my counterpart in Northern California, the Executive Director, COO, Len Dumas.
Thank you, Tom. Thank you, Tony, and good morning, everyone, and welcome to the Monday California Chat. First off, putting the admin aside for them, I want to thank everyone for the comments we received both during and after these chats. The support has been tremendous, and together we're making California just a little bit smaller as we communicate on the issues in front of us. And we've been spending some time looking in our rearview mirror, and now we're looking outside, looking through the windshield as to how we're going to roll out, as there are some encouraging signs on the horizon. Certainly a lot of road between now and then, but it's nice to be talking about what the future looks like. And so we're very grateful for that. Thanks again to our speakers and everyone who's taken the time to set this up. So let's get to that. As Tom mentioned, there is a chat box. If you look at your control panel on the right-hand side, pretty much most of the way down, and we'll monitor the questions and look to address those after each speaker. The MSRs are important, as we've responded to some of you, that everyone is working remotely, even the crew at HQ in Florida. So some of the postings are taking a little bit longer, but we'll get to all of them. And Tom, let's go. We've got a full day. We've got a great agenda, great speakers. So let's start off. Back to you.
Yeah, we do. Thanks, Len. And many of you know Ken Farrell, the career consultant, mostly from Southern California. Ken and our staff and then find out what kind of assistance you may need and how you're doing during these difficult times. And at this time, Ken Farrell, welcome. Well, Ken is here. Maybe having problems with the mute button.
Tom, I'm showing that can you hear me?
I can now.
Okay, great. Thank you, Tom and Len and the sections for giving me a couple of minutes to speak. I really appreciate it. And also to Craig and Kevin for all of your efforts to help all of us understand kind of what's happening with this virus and how it's affecting our industry and what you're doing on our behalf to support us. It's helped me when I'm in discussions with PGA members, so I greatly appreciate all of your insight and your information as well. So a couple of things that we're doing, and something very, very important, is our outreach to PGA members and associates to find out exactly where they're at with their employment. Are they receiving benefits, answering questions that they may have. The one, I was talking with Tony Latendra this morning, and the one thing we agreed upon was the only thing that's consistent is inconsistency. There's a lot of confusion out there as to should the club be open, should the club be closed. Tony was telling me an interesting story about a club that was open, and then the sheriffs rolled in and closed them down. Then the sheriffs rolled back in and told them they were able to open again. And so there's a lot of confusion out there. If you have any additional questions, reach out to me at any time, and I will try and get you the information that you're searching for. Jeff Johnson, Junko Suzuki, and I, again, have been reaching out to members and associates to really find out what is going on with you, and also what you're doing with some additional time on your hands potentially as well. With regards to unemployment, I think we're going to learn some information on employment today, which I'm really looking forward to. I will tell you that my son worked for the Hilton and claimed unemployment. It took him about 2.5 weeks to get a response back in the mail. And he's now getting his unemployment benefits. So it seems like it's about a 2 to 3 week time is what I'm hearing from people as to the benefit that you start to get. One of the things that you might do if you haven't done is to go onto your account and look for questions that you might be asked to answer so that they can complete your your application. I know that my son had to do that. And once he did that, the benefits came in quickly right after that. So please look for that. We've talked a lot about preparing for the future. Hopefully we're going to open our golf courses again in the not too distant future. And so part of the talks that we've had with members is really getting ready for operations, as well as some career planning opportunities. As part of the career planning process, it includes things like self-assessment and goal setting, skills gaps, putting a career plan together, how to promote and market yourself, pursuing opportunities, resume and cover letter, interview and negotiation. Those are all things that we work with members with on a daily basis. And so when I reach out to you, I probably will discuss that with you. Or if you want to talk about any of those subjects, please reach out to me and I'd be happy to go over some of those things with you. Keep in mind one thing that our national association has made the lifelong learning, the free online course access until June 30th. It's your opportunity to get to the library, which has over 200 subjects at no cost. Generally, that's a $350 cost. So you can go right into the specialized field, which of course is 3 different areas: teaching and coaching, golf operations, and executive management. That is available to all members except those members that are in Class F. And it's a great opportunity. There is another site that has college classes on it that were set up for Ivy League colleges. And so there's a lot of online learning that can be done in your time at home. This particular site is called classcentral.com. Go on there. There's free classes for leadership, communication, marketing, technology, different things like that. A great site for learning is your home. Finally, I'll finish up with the PGA.org. A great time to go into PGA.org. The first thing is that the National Association is updating that on a daily basis for information on COVID-19, as well as what the PGA is doing for you, the member, which is significant. A couple of things that we'll ask you to do is, as you know, Career Links is going away. Normally, that's where your management postings would come from, directly to your email from your profile. And we're eliminating Career Links and actually posting all management and non-management positions on PGA Job Finder. What that means is that you'll need to go to PGA.org, go to the top, and complete a profile, which is only about 5 questions on PGA Job Finder. So if you'll do that, you'll start getting those postings now through Job Finder rather than Career Links. At this time, you can check your dashboard on PGA.org. Make sure that any information about you is up to date. It's probably a good time to do that. You can use the change form if you see your address, your contact information, your email, your telephone number. Any of those things need to be updated. You can use the change form for that and submit that. Quick turnaround time on that. And then just finish up with this. I'm getting this question a lot. If you have been furloughed, you do not need to complete a change form for that. You'll be back to work at your club within a short amount of time, so you don't need to do that. Tom and Len, unless there's any questions that I can answer, I'll go ahead and turn it back over to you now.
Thanks, Ken. Any questions for Ken on the question board?
Yeah, it looks like there was one that said, can you give us any insight about having to look for work requirement, collecting unemployment, and how we can navigate that? Do we need to?
Is that question related to how to complete the unemployment application?
Doesn't really clarify.
We also have Mr. Weissman coming on as well.
Yeah, we'll hold off on that one then.
Yeah.
Let's do this. Let's do this. Let's listen to Mr. Weissman, and he will probably answer the question. If not, reach out to me, and I will help you actually get to the EDD and fill out that application. I'd be happy to do that.
Yeah, that's good. Thanks, Ken, because there's many who will need help in that regard. So those of you who just heard that, please get in touch with Ken if you do need some assistance, and Ken will be happy. Carol Pence has said, I'm not going to speak for her, but Carol Pence, I would assume, the same in Northern California. And Ken, there was a question about, I believe it was pga.org was the website. There was someone who asked that question that you referred to, and I believe it was pga.org.
And what's the question, Tom?
No, that was the question. Was it the website you were referring to?
Oh, got you. Okay.
Yeah. Was it pga.org?
Correct.
Yes, I thought so. Okay, thank you. With that, we're very privileged to have an attorney, William Weissman, that will cover and discuss with us unemployment insurance and other employment-related matters. So welcome, sir. Glad to have you on this morning, and we appreciate it very much.
Can you hear me okay?
Yeah, you're breaking up a little bit, but we can hear you. Let's go ahead and we'll figure that out.
Can you hear me?
Yes.
Okay. Okay. So that works. Good morning, and thanks for having me. Let me see if I can get this to share.
We can see your picture well. You're a little bit staticky on the conversation.
I'm trying to. Okay. Show my screen. There we go. There we go. Can you see the slides?
Yes. Well, now we can't, but we were able to. Now we can, but we can't hear your voice.
Sorry about that. Okay. Can you hear me now?
Yes, but you're still garbled.
Is there audio? Let me try something else.
Yeah, same.
How's that? Better?
Let's why don't we try to get this fixed, Mr. Weissman, and then we'll go to John Lindert, and then if that's okay, and come back to you. Is that okay? Okay, thank you.
Yep. That sounds great. Thanks.
Well, at this time, while Mr. Weissman gets the technical difficulties taken care of, Mr. Lindert, are you still there?
I am. Can you hear me?
Yes, sir. Good morning to you. Thank you.
Good morning. How is everybody this morning? Thanks for having me on. Hope all is well in Southern California, and hopefully golf is around the corner to be opened up and ready to go. I know here in Michigan, we constantly battle day in and day out. We had an executive order recently that basically addressed golf and said that golf was not permitted. And then as late as Saturday night, the Attorney General's office came and said that as long as we don't have to handle money or have people on property to distribute golf carts, that private clubs could be open, which caused a stir. More clarification today, the Attorney General's office said the same thing, that as long as we weren't collecting fees, running golf carts, and adhering to social distancing, that we would be able to play golf. So that's good news for us here in Michigan, although it's snowing right now, and last week it was in the 70s. So we've had a little bit of a challenge. From the PGA of America standpoint, not a lot new to report other than if you watched CEO Seth Waugh and President of PGA America Susie Whaley's Friday conversation, you heard Seth talk about the development of a golf relief and assistance fund. More information on that is going to roll out today, this afternoon. We have contracted a company, E4E, to be the manager of the Golf Relief and Assistance Fund, and that is going to help people within the industry. There will be a couple different types of grants that will be given. So in other words, it won't be a loan, it will be a grant. We're initially going to fund it through some donations from PGA of America C-suite staff, cuts and donations, along with the officers and the board of directors are going to help fund it on the initial investment. And you'll get more information, as I said, about that this afternoon. I can tell you that we're still working extremely hard on all levels. Still talking to people in Congress about getting the 501c6s and 501c7s under the PPP. And that conversation is ongoing. Letter writing is ongoing. I'm sure you in Southern Cal and Northern Cal are all writing letters. We here in Michigan are writing letters, and we've made it more a point that it's not about the business that's affected, but about the employees that are affected. And hopefully we'll see here another phase of the economic stimulus program roll out, and we will see the 501c6s and C7s be included in that PPP, which would be hugely beneficial for our facilities and more importantly for those that are employed by those facilities. Other than that, I really don't have a whole lot new to report. As was mentioned earlier, the MSR requirements have been pushed back 1 year. Those associates that are in the pipeline have now 9 years to complete their acceptable progress. We have hosted numerous webinars to date. PGA.org continues to be a tremendous resource for information on COVID-19, along with any other questions you have, whether it's regarding unemployment. I know here in Michigan today was the first day that those that were unemployed were able to file for the extra $600, and it basically flooded the unemployment agency here in Michigan and shut it down almost immediately. With regards to the championships, at this point, we still have plans to host the PGA Championship in sunny Northern California at TPC Harding Park, and we look forward to coming out there in August. We're working on finalizing the dates and scheduling for a PPC. We're still in negotiations with Omni Barton Creek to be the host of that, which obviously was scheduled to be in April. We're trying to broadcast that, postpone it until sometime in July, but until we have a finalized date, I'm not really at liberty to say when that will be. But our hopes is to have it at Omni Barton Creek in order to qualify 20 very good playing PGA professionals to play at the PGA Championship at TPC Harding Park. The KitchenAid Senior PGA Championship was, however, canceled, and unfortunately those 35 PGA professionals that qualified for that will not get to play in the 2020 KitchenAid Senior PGA Championship. However, those 35 individuals will automatically qualify for the Senior PPC this year and have an opportunity to qualify for the 2021 KitchenAid Senior PGA Championship. As I said, other than that, it's been constant conversation with officers, with staff. Staff is working tirelessly, and I know that sections across the country are running these webinars. It's been a new wave of communication for many of us. I would also add that one of the other things that has transpired is there is online education available for those associates. There are seminars that are taking place. I have an associate that is actually, as we speak, taking Golf Operations Level 2 online. The fee has been reduced to $750, and there are a variety of different levels that are rolling out. I think each level has at least one of the 3 career paths that is rolled out, level 1, 2, and 3 for those online educations. So if you're an associate, it doesn't slow your path, but you can go to pga.org to find out more information about that as well. And at that time, I'll just turn it back over to you. Once again, great job from everybody, from Tom, Len, Dee Dee, and Tony. Thank you for all you're doing for the association and for the members out in California. And we're here with any questions at any point in time.
Thanks, John. Appreciate that. And any questions, Caitlin, for John, Mr. Linder?
Yeah, it looks like we had one that said, is the 5 million USGA donation being applied to the Golf Relief Fund? Are they a partner?
So in the initial rollout, they are a partner. That is a separate situation altogether. The initial funding, as you will see in the letter that will go out this afternoon to everybody, the initial funding is coming from us, the PGA of America, our staff, and our board. There is an opportunity for other allied associations to contribute, in which case the PGA of America would match up to a given point. And we hope that that fund will grow in size and it will exceed the $5 million mark.
Okay, great. It looks like there was one more for John. Can you explain a little more regarding the associate program you just mentioned for 750?
Yeah, so there are the seminars that normally you would travel to Port St. Lucie for have gone from being in person to being online. And you can sign up for those. There have been emails that have gone out to associates depending on what level you're in and what career path you're in as to the availability of those. The golf operations one that is going on currently is in level 2. I believe they have about 150 associates online taking that class to begin today. But you will get emails. If not, you can reach out to me and I can do some research, or reach out to Mr. Addis or Mr. Dumas, and they can get a hold of me, and we can try to figure out if there are any seminars within your career path going forward. I know they've had great success with it, and I think the associates are enjoying it from the feedback that I've gotten to date.
It looks like that was all the questions specifically for John. A couple people have been having problems with the specialized program online. It looks like they were having a difficulty getting into that, but other than that, that was all the questions.
Yeah, I actually went into the specialized program this morning just to kind of check it and see how it was functioning. I did not have an issue doing it. I can check with HQ. There might be kind of an overload as people are trying to take advantage of the free 90 days. So lifelong learning is free through June 30, at which point it would go to that $350 fee. So if you're in that queue, please take advantage of it.
Thank you, John. Appreciate that, and all you do and the officers and staff do to make this time a little bit easier. So appreciate that. Let's, if Mr. Weissman is there and audible, let's give that a try again.
Okay, can you hear me now? Better?
A little better, thank you.
Okay, so we'll try this again. All right. Show my screen. Do you see the slides?
Yes.
Okay, great. So I'm going to run through this pretty quickly and happy to try to answer questions. And if there isn't time, during this call, I'm happy to try to answer people's questions afterwards. Just reach out to me. There were 2 main acts that Congress passed. One's the FFCRA and the other's called the CARES Act. They provided different kinds of relief. Here, the first slide just really is, let's see if I can. There we go. A little better. It kind of breaks down the different programs for you because they do have different requirements and they create different benefits, but they are sort of segmented by size and some of the main benefits. And then we'll just slide through them kind of quickly. The Families First Coronavirus Response Act, FFCRA, basically created a paid sick leave option and a paid family leave option. The first 2 weeks are unpaid, and then you have paid leave. They're for specific requirements. There are exceptions for employers with under 50, but this applies generally to employers of 500 or less. And so this is a somewhat limited benefit, given that it's really for someone who is either sick or caring for someone sick, or caring for a child whose school or place of care is closed during the current pandemic. And so this slide just kind of shows you a little bit of the difference between, sort of paid sick leave and the paid FMLA leave. There's a lot of acronyms that have been created as a result of this law. It's hard to keep track of all of them. So we have EPSL, emergency paid sick leave, but I think that the bigger picture to keep in mind is, again, for purposes of the FFCRA, it's really, again, intended to create a paid leave program for people who are either sick or caring for someone sick, self-quarantining, isolating. These are the qualifying reasons on the left side of the table. And then the cap tells us what you can get paid. And these are the totals. So it's always at, excuse me, for the qualifying reasons that are the sick pay really at your regular rate, but it's $511 a day, and it's for 10 days or 2 weeks. It's $5,110. The other qualifying reasons are 2/3 of your pay, but not more than $200 a day, which is not a lot, admittedly, of money. What's been called FMLA Plus, that's the additional 12 weeks, and again, relates to either caring for someone who's sick or son and daughter out of school. And it doesn't apply if you can telework. So if you're able to work from home, these benefits are not particularly helpful to you. And they're in addition to whatever other benefits may exist. As you may know, in California, we already have paid sick leave, 24 hours. Local jurisdictions have other laws, and so there is interplay between these as well. So keep that in mind. But let's go to the CARES Act, because that's probably a little more important. And the CARES Act did several things. We're going to whip through these quickly as well. First is the Payroll Protection Program, and that created a forgivable loan that is basically to pay 8 weeks of employee payroll for small businesses. There are SBA rules as to what a small business is. It's generally under 500 employees, or workers. It doesn't have to be. There are certain exceptions to that. It can be for certain types of nonprofits, but not 501c6s. There are other loan programs that are available. They have somewhat different terms for them. There's the the emergency loans that are available. I think there was a question someone was asking about the economic injury disaster loans. Those are for $10,000. They're also forgivable. I didn't put a slide in on those. But basically the idea is the federal government is going to pick up the cost of payroll for 8 weeks. And you can use some of that money also for rent, utilities, or other expenses. And you can get these loans if you're a self-employed person as well. The loan is deferred for 6 months, so long as you use it for the intended purposes. Again, at the end of that time, it is forgiven, which is an excellent benefit that the federal government is providing right now to small business in order to keep people on payroll. So long as you maintain the workforce between February 15th and June 30th, forgiveness is included. If you've laid people off, you've got to bring them back. And that's a key provision. So you have till June 30th to do that. But again, the point of this is to pay people for the next 8 weeks or 8 weeks from the time you get the loan until the end of that period. And hopefully, I think the thinking of Congress is that 8 weeks will be as long as necessary to hopefully start to come out of this, and then maybe continue back into operations. So there's also an employee retention tax credit, and this is a refundable tax credit, qualified wages. This is for businesses that are either over or under 100 employees. So if you're under 100 employees, it applies to any wages that you pay, qualified wages, which are really any wages plus healthcare expenses. If you're a business that is larger than 100 employees, those two qualifying provisions in the last bullet point have to apply, meaning either the business is fully or partially shut down due to a government order, or gross receipts have declined by 50% or more during the same quarter in the prior year. And the qualified wages are capped at $10,000, which means the credit's worth about $5,000 or is worth $5,000 per employee. Here we go. Sorry. Forward. So here again, it applies beginning March 13th and runs through the end of this year. So also important, as it may take a while to get back up and running. You have time to use these credits. More likely than not, they'll be exhausted through the second and third quarter. There probably won't be much left in the fourth quarter in terms of these credits. One thing to keep in mind is you can't take a credit and a loan at the same time. Essentially what the government won't allow is double dipping on the same benefits. So if you have a PPP loan that is being used to pay your payroll, you don't then also get a tax credit for having paid those wages. So it's one or the other. Now, having said that, they're all available to you, so they can be used in stages, meaning if I get a PPP loan, I use that to pay for 8 weeks of compensation. At the end of that period of time, if I'm continuing to pay people, I can take that employee retention credit. So it's important to recognize that the credit is for the employer side of taxes. To the extent employees are getting wages, they still have to pay their share of Social Security and Medicare tax. As an employer, we have to withhold those taxes and remit them to the government. That's very important. If you're getting a credit that exceeds what you're paying in tax, and you can offset by withholding those deposits, you can get an advance from the government by filing Form 7200, and the government will actually start sending payments to employers. It's anticipated that that'll probably start happening middle of April, which we're just about to, so that's good news as well. So the money should start coming soon, particularly given that these credits have been now available for a month since March 13th. So there are a number of FAQs that the IRS has put out. There's a link here on the website that provides detailed explanation about how to get the credits, how to calculate the credits, and how to reflect them on your quarterly returns, the Form 941. And then the last piece of the CARES Act was Social Security tax deferral. And this is available to employers of any size, and again allows you to defer the employer side of Social Security tax, not the employee side, but the employer side, through the end of this year. And then you can pay half by December 31st of next year and half by December 31st of 2022. And there'd be no penalties and interest if you do that. So those are the primary functions of the FFCRA and CARES Act as it relates to sort of tax provisions. Now, just wanted to spend one last minute because I know we don't have too much time on the unemployment piece. The way the CARES Act works is fairly straightforward and fairly complicated all in one. It did not change the regular unemployment system. And so if you've been laid off or you have a reduction in wages or salary, that is typically a reason to qualify for unemployment, regular unemployment. You'd file a claim, and as someone mentioned early in the call, California is probably about 2 weeks out right now, which is not bad for processing claims. And so you would just file a regular claim for unemployment, and there's a weekly benefit amount that gets calculated based on wages that have been earned and reported over the last 4 or 5 quarters. And that gives you a dollar amount. It's between $40 and $450 in California. And then added to that is the $600 payment that Congress authorized through July 31st. That should apply, frankly, to most people today who have, again, been affected by COVID-19 and are, unemployed or underemployed. So that again should cover most people. But what happens if you're not covered under that? So the CARES Act added what's been referred to as pandemic unemployment assistance, or PUA, benefits, and that applies to independent contractors or self-employed individuals who don't have enough wages earned in their base period or who have exhausted benefits from a prior claim. They are entitled to unemployment as well. There's a slightly different formula for calculating the benefit amount, but there would be a benefit amount plus the $600 as well. And so anyone, regardless of whether they think they're eligible for regular unemployment or not, should file a claim. Certainly in California, the best way to do that is online. It's quicker than paper. You can't go in person generally. There's some limited operations right now in California, at least until May 3rd, I believe is the date, although that's subject to change as well. And if you're denied for some reason, there is an appeal process, and you should appeal that and continue to try to fight for your claims. Now, if you are working but have had your salary reduced, you can be eligible for unemployment and not receive anything, and that's because if your amount of wages being earned in any particular week exceeds the weekly benefit amount minus 25%, you simply won't have a benefit amount. And so what that basically means is if you're earning $600 or more in a week in California, you're not going to get benefits for that week, and that includes the $600. And so for individuals who are working part-time, you know, that $600 threshold in weekly wages is pretty significant. So with that, let me turn it back to you, Len and Tom, because I know I don't want to take up all the time.
Thank you, Mr. Weissman. I'm sure there are a number of questions that Caitlin has for you, so let's get into those.
Sure.
Yeah, we have a bunch. So first one is, as an independent contractor, can you apply for PPP or EIDL, one or both?
You can apply. I'm not that familiar with EIDL, but I believe that independent contractors can apply for it. They can certainly apply for PPP loans.
Okay, great. Would a dependent filing unemployment also receive federal benefits of $600?
Dependents are not precluded from unemployment in any way. And so if you're, just because you're a dependent, if you've worked and you have eligibility for unemployment, you would otherwise qualify. And if you don't qualify for regular unemployment, you may still qualify for PUA benefits if you otherwise meet the requirements of PUA. So for example, I may be a dependent, I may not have earned enough wages, but I have been laid off and am unable to get to my place of employment due to COVID-19 closures. I would be eligible or should be eligible for the unemployment benefits.
Okay, next question. Our bank, US Bank, has still not sent out apps for any businesses other than single owner businesses, supposedly co-owned, like ours is coming out this week. Have other banks started accepting applications, or is this the standard out there across the board with banks?
Yeah, that's a good question. I think the banks are all over the place. So the program went live last Friday. Many banks were not ready on that date. Some became ready last week, or a week ago Friday, actually. So just a little over a week and a half, I guess. Some banks were limiting the types of applications they were taking, but I think as more banks have gotten the process in place, the various kinds of applications are being allowed. I don't know that there's really a clear answer to that, other than, again, yeah, I think banks have been all over the place. Okay. If your bank, for whatever reason, can't or won't help you, you know, there are credit unions and other financial institutions that you could try to go to. One of the issues is some of the banks have refused to do loans with new customers, for example. They'll only work with customers, existing customers. And so if for whatever reason your bank is not moving fast enough or helpful, I would try another financial institution.
Okay, another question here. Did the employees have to work to earn payment under PPP loan if the facility is closed?
No, you don't have to be working to be paid the wages. And so that's an important point. The point of PPP is to pay wages. It's not necessarily to ensure that the business is operating or that people are actually performing service. The idea is really to just ensure that people have income. And so there's no requirement that anyone be working in order for a PPP loan to be obtained. The purpose, again, being to pay wages, not to ensure performance of service.
Okay, we have a couple questions about the $600. It says, did you say that if you earn more than 600 per week, you will not be eligible for UI?
In California, yeah, because the way the UI, regular UI works is you have an eligibility determination. Separate from that is the determination of how much in benefits you would receive. And so depending upon what your base period wages were, that tells you your weekly benefit amount. And so the maximum weekly benefit amount in California is $450, which kicks in at around 52,000, I believe, or $54,000 in wages for a year, roughly. And so if one assumes that you're entitled to the maximum benefit, that's $450, if you are partially working, the formula says you take those partial wages and you subtract either $25 or 25%, whichever is greater. And so 25% of $600 is $150. 600 minus 150 equals 450, which is your maximum benefit. And so again, the way the formula works is if you have partial wages in a week that you are eligible, they must be less than your weekly benefit amount. And so just by math, at $600, you've made equal to the weekly benefit amount and therefore wouldn't get unemployment for that week. So at $599, you would. At $600, you don't. So if you're trying to manage the greatest benefit possible, you want to earn just under $600 in order to get both the weekly benefit amount to which you'd be entitled to, plus the $600 in additional unemployment benefits through July. And you just have to calculate that number based on your actual weekly benefit amount and what you're getting paid to ensure you fall below it.
Okay, and then what if they have no wages? Do they apply for the 600 or automatically triggered when they apply through the state?
If you're not earning any, I think that's the question. If you're not currently earning any wages, you would still apply, and then whatever your weekly benefit amount is, you would receive plus the $600. You only have to worry about the issue if you're actually still performing service and getting some wages. So if you're not working and not receiving any wages or any income, then you would just get a benefit amount plus $600.
Okay, it looks like we have a couple more. Can California deny our UI unemployment benefit amount if we're not proving that we are looking for work?
The short answer is maybe. So in the current environment, the looking for work requirement has been relaxed. What is unclear is for exactly how long that'll be around or the parameters of it. I think in the short term, we would say you don't really have to be looking for work. You know, if this drags on to July and golf courses are open and the clubs are open, they may revisit that issue if you're not saying that you're looking for work. But I think right now, today, sort of, and for the next several weeks, probably in the near term, that looking for work requirement should be relaxed.
Okay, it looks like are Social Security recipients who are still working eligible for unemployment benefits?
They should be, again, under the same sort of parameters, which is if they're receiving too much income in a week, they may not receive an unemployment benefit, even though they may be otherwise eligible for unemployment.
Len and Tom, we got some more time for a couple more questions, or do you guys want to move on?
Let's, Caitlin, let's do one or two more. And William, I'll ask you to address, because some folks have W-2 wages and also have been independent contractors and may have filed a Schedule C. So is it possible to apply? How do they bring that together in terms of unemployment? As a W-2 earner and as a Schedule C, are those separate applications?
Yeah, that's a great question for which there isn't clear guidance. I think the question becomes more simply, if you have sufficient wages just as an employee, I would just use that route and not worry about my self-employment income, because you're more likely to get your claim processed and paid quicker than using your IC status or your self-employment status. However, if you wouldn't be receiving the maximum benefits just off of employment, but could, by combining your independent contractor income with your employment income, then I would probably try to file a claim that reports that income, which may require you filing as a, well, let me say this, there isn't really at the moment separate processes. I mean, you're filing a claim and they're supposed to make a determination, but I would include both sides, my employment and my self-employment, in that scenario to ensure that I can get the most in benefits to which I'm entitled. But if you don't need the self-employment, it's probably cleaner just to use your employment, and then you don't have to worry about it.
Okay, great. William, thank you. So understand, one application with the dollar amounts combined.
Yes, if you wouldn't otherwise just be eligible for the full benefits off of your employment. Yes, that's what I would do.
Okay, thank you. Okay, Caitlin, let's keep going, please. Thank you.
Okay, looks like, is CARES money paid as a separate check? I didn't get it on 4/6 with my first UI check.
Yeah, the CARES Act allows the states to pay it separately. Governor Newsom said last week that those checks would start going out yesterday. So it remains to be seen whether that in fact happens, but those should be hitting bank accounts if you get direct deposit or the pay cards. There really aren't checks anymore, right? But those amounts should hopefully be hitting people's accounts this week. I don't know whether California intends to get those payments together at some point in the future. It wouldn't surprise me if they remain separate due to system issues. They may not be able to have the system send a single check for the weekly benefit amount and the $600 together. So my guess is you'll probably continue to receive two payments.
Okay, we have one that says, I'm a furloughed employee who applied for unemployment insurance. I listed COVID, reduced hours for the reason. However, it says on my homepage, I'm still required to look for employment and be ready to accept employment. I thought these two requirements were waived. Can you just provide more insight on all that?
Yeah, they have said the guidance that has been issued has relaxed that requirement. Now, I think what you would say is, I am looking for employment insofar as you're waiting for the furlough to end. But I would just say I'm looking for employment. I mean, one of the problems with the UI system is it's process oriented, and the current environment doesn't fit the regular process. In a typical world, if we were laid off, we'd go get another job, maybe in a similar field, maybe not. But in the current environment where things are shut down, there aren't really other jobs to go look for. And so that was one of the reasons for relaxing the standard. I'm not sure though that the systems and what gets spit out to people is modified yet to sort of say, you don't have to worry about this. So, you know, I would again say I am able and available to work, and I would look for a job if that was possible. But I don't think in the very short run, the work search requirement is in play in California. I mean, that's been said more than once.
Okay, how about, does the 600 federal subsidy come from the state automatically, or do I need to apply elsewhere?
No, it should come from the state automatically. Let me rephrase that. If you are receiving a weekly benefit amount, so if you're getting at least $40 from the state of California, you'll get the $600 automatically. You don't have to separately apply.
Okay, it says the EDD said the 600 will be allowed for the week ending 4/4, not before. I believe that's correct.
That's correct.
It looks like that's the majority of the questions here, guys. Couple people have asked what the difference is between an independent contractor and a self-employed, and how this is affected.
There's no difference. Self-employed and independent contractor are the same for purposes of applying for unemployment benefits.
So, William, in the situation where someone has filed as an employee W-2 and are already receiving benefits, can the application be refiled, adding the independent contractor income? In other words, they didn't earn maximum benefits based upon their W-2 wages.
Yeah, interesting question. I think they can try. Again, I think the problem is California and frankly other states they're not equipped to deal with that change. And so I think it might be a little rocky over the short term as they try to figure out how to process that. But I certainly would try.
Okay, thank you, William.
Yeah, thank you very much. That's extremely informative, and maybe we can ask you to come back, Mr. Weissman, in a short period of time to discuss some of the changes that have come about. I think that would be very interesting for our PGA professionals and others as we go through this. So we'll certainly ask you and talk with you about that as time goes on. So much appreciated. As told by the number of questions, those of you who I'd like to remind you again, those of you who have questions, we will also respond to them, those questions via email and in subsequent presentations. Let's take a few minutes before, I know we're 5 minutes over as we sit, but Craig Kessler has been very patient, and from the Southern California Golf Association, the Government Relations Director, and I don't know if Kevin Fitzgerald's still on the line, but Craig and Kevin, if you have some reporting to do, now would be the time. Thank you.
Thank you, Tom. Three things. Two of them have been mentioned in the call by previous speakers, and I'd like to add some information. First, with respect to the $5 million United States Golf Association program to assist the allied golf associations in the United States, that is a means-tested program, maximum of $100,000 to an applying Golf Association. And because it's means tested, the two amateur associations in this state, the SCGA and the NCGA, will not be receiving any benefits from the program. I know that Seth Waugh, at least a couple of weeks ago, had talked about taking a pile of PGA of America money and combining it with the USGA, some of the other allied organizations, and in particular the PGA Tour, and coming up with one massive program that would make all of those who work in the golf industry eligible: golf professionals, superintendents, obviously staffers for amateur associations and for PGA sections. Whether what the USGA means that they do not intend to participate, or whether that idea of collaboration has fallen through, I have no idea, but that's probably something that Tom and Len, excuse me, can follow up on. The second thing, John Lindard explained I'll preface my remarks by saying that I'm a bit of an outlier, but I'm going to share these thoughts anyway. If you are working at a 501c7 private equity club, I was not the least bit surprised when C7s were left out of the Paycheck Protection Program for a lot of reasons. It strikes me that whether through the NCA or the CMAA, private clubs have been the central organizing principle of their lobbying is that they are private clubs and they have certain rights and they have certain exemptions that public access or general businesses don't have. They're nonprofit, that's to be sure. And the nonprofits that were included in the PPP are the charitable nonprofits, the generic category, and then one specifically to veterans groups. The effort to put them into the PPP fell through. I know there's discussion about future legislation, and I know right now Congress is openly talking about adding $250 billion to the PPP, but neither political party is briefing on behalf of the C6s or the C7s at this particular point. The Republicans were for it initially and took it out of the bill at the insistence of the Democrats, and nobody is discussing putting it back in now. Whether or not there can be some separate legislation that makes them amenable to some of these more direct subsidies, I have no idea. I'm personally skeptical. That's a personal opinion, and I hope to be proven wrong in that particular opinion, believe me, because the SCGA and the NCPGA and the SCPGA are C6s. So I think we have a visceral interest, and about 40% of SCGA's clubs in Southern California, and probably a similar percentage in Northern California, are C7 corporations. But there are opportunity costs sometimes to pursuing an avenue that doesn't bear fruits. Finally, I'd just like to reiterate something I've talked about on previous calls. Yes, there is some golf in a couple of remote Sierra Nevada counties which have extraordinarily low populations. And San Luis Obispo County and Sacramento County are outliers, keeping in mind that counties make these decisions, not the governor, and they make them independently. But in Southern California, for the most part, golf is shuttered. Now, that doesn't mean, I think you've heard Len and others on this call talk about there are some encouraging signs that we are getting closer by the day to flattening the pandemic curve to accomplish what is the goal of all this stay-at-home directive, and that is to ensure that at least in the short run, the public health system's capacity to literally deal